So let me go straight to the point of Indian demand, world palm oil supply, and the resultant price outlook. Production of palm oil has been better than expected since February 2014. We have not yet seen any effect of the dry weather that we had earlier in February this year. If the El Nino turns out to be mild and delayed, as many weather forecasters are predicting as of late, palm oil production will turn out to be better than my earlier estimates. My current estimate for Malaysia is that it will produce between 19.7 and 19.9 million tons in 2014. Indonesia is expected to increase its production by 3 million tons this year, and they will reach 30.5. Last year they were at 27.5, this year they go to 30.5. Again, it is possible that Indonesian production will turn out to be higher than my estimate. As regards stocks and the equation of supply and demand, I am going to give you some interesting statistics. And these are really quite important. Malaysian production in the first 5 months of 2014, from January to March, was higher than last year, 524,000 tons. So production was 500,000 tons higher. Exports of palm oil from Malaysia in the first 5 months of the year were down by 750,000 tons. That gives you in stark reality the reason for the drop in prices. We are already hearing reports of the highest ever planting intentions for soybeans in Brazil for later this year, for the next crop. And Argentine farmers will have no alternative but to plant and produce more soybeans because it is the most profitable and the least regulated crop. The prospects for rapeseed in Europe and in Australia are quite good, and for canola, prospects are quite bright in Canada too. Sunflower seed plantings in Ukraine and Russia are almost at the same level as the previous year, and the growing conditions so far have been good. I myself have often spoken about the threat of drought in this sunseed belt. Every 2 or 3 years you have a drought, and now we have had 2 years of good crops in this part of the world. But so far, the dry weather is mostly confined to the wheat belt around Kazakhstan. The sunseed belt has escaped that dryness so far. Hence, overall, the prospects for large oilseed crops in most parts of the world look very favorable. Now we come to India. The Indian monsoon does give cause for concern as of today. However, the most important rainfall we must remember in India is the rainfall from mid-July to end of August. That is the most critical rainfall. Groundnut as an edible oil is no longer relevant or material in India. As for soybeans, even in the most cruel drought of 2011, India lost less than 2 million tons of soybeans. Depends on what your estimate of the crop is. But even the most pessimistic estimate of 2011 harvest will say that India lost 1.5 to 1.6 million tons of soybeans. That's all. As I always emphasize, India produces so little edible oil of its own requirements during the Kharif season that a shortfall here or there has very little effect on the S&Ds of the world. The greater impact of a drought in India comes from the hype, which leads to inflation because of sentiment. Less rainfall affects India much more in the generation of electricity, not so much in the production of oilseeds. Indian demand so far in the oil year 13-14 has grown almost in line with historical trends. The only difference is that the excellent rabi crops of last year provided more domestic oil, and so the imported oil volume has been flat. As Govindbhai showed, imports in the first 7 months of the year have been exactly the same as in the 7 months of last year. But in the remaining 5 months, we expect that there will be a rise in import volumes, and we will touch the figure that he displayed of about 11.1 million tons of imports. On a related note, I am very bullish on the Indian economy with the election of the new government headed by Mr. Modi. From September onwards, we should see a powerful feel-good factor take shape in the Indian economy as all the problems of the monsoon are forgotten and people concentrate on the growth that is likely to come back to the Indian economy. The higher mandate for biodiesel announced by the Brazilian government. This is one government in the world next to the EU and the United States which is absolutely serious about biodiesel, and when they say that they will increase the mandate, they increase it. They tell Petrobras to go in, call for tenders, buy the biodiesel, distribute it. In short, they fulfill what they commit. The Brazilian government announced that from 1st July, the biodiesel mandate for transport fuel goes up to 6%, and subsequently from November it will go up to 7%. This is going to be a game changer for soybean oil. I believe that after the enhanced mandate comes into force, for the rest of this oil season, the Brazilian season, until the new crop comes in March, April, from November onwards, Brazil will not export any soybean oil. Everything will be used locally. On the other hand, before you start placing orders for soya oil, we have a severely inverted market in soybeans. From the current level of November soybeans, which is in excess of $12 a bushel, new crop November beans are expected to decline towards $10 a bushel. So, in the face of declining bean prices, it is not going to be possible for soya oil futures to keep rallying on the CBOT. That job of pricing soya oil will have to come through the cash basis, the cash premiums. But in any case, the ability of soya oil to climb is reduced or capped by the fact that one has to expect soybean prices to decline in view of this very massive crop that is underway in the United States. On sunseed, given the excellent competitive position of Black Sea sun oil, prices of sun oil remain very attractive. The weakness of the Ukrainian currency has helped in this regard. We need to keep an eye on weather in this region. This region was prone to drought, is prone to drought, and we still need to keep an eye on the weather in this region. I now come to world demand. World demand for veg oils has been flat so far this year. This may be because of the underperformance of biodiesel. It may also be due to the lack of strong growth, and there has been some destocking in the large importing countries like China and India. I expect world food demand still to grow by 3.5 million tons. Biodiesel demand I now expect to grow by only 1.5 million tons, not the 3 million tons that I was expecting earlier. My key assumption on price outlook is that I have taken Brent to trade in a range between $100 and $120 a barrel. At the moment, Brent is already at 115, but my own feeling is that the Americans and the Iranians will combine and do something to stabilize the situation in Iraq, which is indeed a very worrying situation. Energy prices are critical to biodiesel demand. If gas oil flares up and the POGO spreads go beyond $180 a barrel, veg oil prices will have to move higher than my forecast. So this is a critical factor. Watch Brent. It has to remain for my forecast to come true between 100 and 120, not higher than that. I believe prices will depend very much on the development and the severity of the El Nino in the medium term. I feel palm has got to become more competitive to recapture its major demand, which is edible demand in countries like India. So I believe BMD futures on the third month should trade for the next few weeks in a range of 2300 to 2500 ringgits. Demand will be good at the lower end of this range, 2300. At the upper end, 2500, Malaysian stocks will, I am afraid, exceed 2 million tons and will work towards a peak of 2.5 million tons by November. If the current dry weather in Malaysia continues beyond the next 2 weeks, it will require a change of view on prices. If that dryness continues, I think prices can escalate to 2600 ringgits, but at that level, palm's demand will be severely tested. Price reaction will depend upon the length and the severity of that El Nino. A weak Indian monsoon will also add something to the bullish sentiment. Therefore, it is possible that at some stage between now and December, BMD futures may climb to 2800 ringgits. If Brent remains at 115 and CPO goes to 2700, palm biodiesel demand will go away. So that's a temporary blip. Price will go up, but it has to come down because demand will go away. I expect CBOT bean oil futures to trade in a range between 38 cents and 42 cents. We are already at 41. I don't expect much upside because, as I said, I actually expect the beans to come down, and the beans cannot come down if oil keeps going up, even though we have a little bit of the oil meal spreading.